Hold on to your seats because what we're about to reveal might just shock you. The U.S. housing market has taken a significant downturn. We're living in a time of unprecedented economic uncertainty. The American dream, that idyllic vision of owning a white picket-fenced house, is slipping further away from the grasp of many middle-class families. The culprit? A volatile and unforgiving housing market. The statistics paint a grim picture. Home prices are skyrocketing, yet wages remain stagnant. The result is a widening chasm between the haves and the have-nots, a divide that's growing deeper with each passing day. Let's delve deeper, shall we? The U.S. housing market, once a beacon of stability and prosperity, has become an arena of fierce competition. A limited supply of homes, coupled with an influx of cash-rich investors, has driven prices through the roof. And what does this mean for the middle class? It means that the dream of homeownership is receding further into the distance. The hefty down payments required to secure a mortgage are becoming harder and harder to save for. High-income buyers and investors are outbidding the average middle-class family, leaving them in the dust. But that's not all. We're also grappling with stagnant wages and a crippling student debt crisis. Middle-class wages aren't keeping pace with the rapid rise in housing prices. At the same time, student loan debt is gnawing away at the ability to save for a home. High monthly payments and a skewed debt-to-income ratio are becoming obstacles too big to overcome. And then there's the tightening of lending standards post the 2008 financial crisis. Higher credit score requirements, increased documentation, and stringent income verification have thrown additional hurdles in the path of the middle class. The side effect of this tumultuous market? A booming rental industry. Unable to afford homeownership, many middle-class families are turning to rentals. But even here, they're faced with rising prices and a lack of long-term stability. The dream of owning a home has become a distant reality for many middle-class families. But what led to this situation? Stay tuned as we unpack this complex issue further in the coming scenes. Let's dive into the factors contributing to the skyrocketing home prices. First off, we're seeing a limited housing supply across the country. Whether it's due to zoning regulations, construction costs, or just the simple lack of available land, there's a definite shortage of homes. And as we all know, when supply is low and demand is high, prices tend to rise. Speaking of demand, it's through the roof in many desirable areas. Cities with booming job markets, high quality of life, and excellent amenities are experiencing an influx of people wanting to call them home. But with limited housing available, competition is fierce and prices are climbing. Now let's talk about the role of investors and cash buyers. They're snapping up properties left and right, often with the intent to flip them for a profit or rent them out. With deep pockets and the ability to close deals quickly, they're outbidding many traditional buyers, pushing prices even higher. These factors together have created a perfect storm that's driving up home prices at a rapid rate. And the impact on middle-class families? It's significant. Saving for a down payment has become a Herculean task. With home prices soaring, the traditional 20% down payment is now a six-figure sum in many areas. That's a daunting amount of money to save, especially when dealing with other expenses like student loans, healthcare, and the cost of living. But even those who manage to scrape together a down payment are finding it hard to compete. High-income buyers and investors, often able to offer above asking price or pay in cash, are edging out middle-class families in the bidding wars that have become commonplace in today's market. The rising home prices have left many middle-class families struggling to save for down payments and unable to compete with high-income buyers and investors. This shift in the housing market is more than just numbers on a page or figures in a report. It's a fundamental change in the American dream, reshaping the landscape of homeownership for millions of people. As if the rising home prices weren't enough, let's add stagnant wages and student debt to the mix. Let's start with wages. For the past few decades, middle-class wages have been growing at a snail's pace. This wouldn't be so bad if everything else stayed the same, but as we all know, that's not the case. The cost of living, particularly housing, has shot up dramatically. This means that while the middle class is earning more in theory, the reality is that their purchasing power is decreasing, Take the housing market, for instance. As prices continue to skyrocket, middle-class wages are failing to keep up. The result? Homeownership, once a staple of the American dream, is becoming increasingly out of reach. Now let's talk about student debt. It's no secret that the cost of education has exploded in recent years. Today, it's not uncommon for students to graduate with tens, if not hundreds of thousands of dollars in debt. This financial burden then follows them into adulthood, affecting their ability to save for a home. Imagine this: you're a recent graduate, eager to start your life. You've got a job, but a significant portion of your paycheck goes towards paying off your student loans. This leaves little room for savings, let alone a down payment on a house. But it's not just about the monthly payments. When it comes to getting a mortgage, lenders look at your debt-to-income ratio. If you're shouldering a hefty student loan, this ratio can tip the scales against you, making it even harder to get approved for a mortgage. So what we have here is a double whammy. On one hand, middle-class wages aren't growing fast enough to keep up with rising home prices. On the other, student loan debt is making it harder for people to save for a home and get approved for a mortgage. Struggling with stagnant wages and hefty student loans, the middle-class families are finding it increasingly difficult to save for a home. Even if you've managed to save for a down payment, the tightened lending requirements might still keep you from owning a home. The year 2008, a year that still echoes in the minds of many, was marked by a global financial crisis that shook the foundations of economies worldwide. This crisis led to a significant tightening of lending requirements in the United States, a move that was intended to prevent a recurrence of the financial meltdown. So what does this mean for those who aspire to join the ranks of homeowners? Well, it's not all sunshine and rainbows, unfortunately. The tightened lending standards mean that the bar for qualifying for a mortgage has been set higher than ever before. Firstly, one of the key hurdles is the requirement for a higher credit score. In the past, a credit score in the mid-600s might have sufficed. But now lenders often look for scores well into the 700s. This does not just represent a minor increase, but a significant leap that many find difficult to achieve. Secondly, the process of applying for a mortgage has become more stringent. There's an increased demand for documentation and income verification. This means you must provide detailed proof of your income, assets, and debts. And let's not forget about the importance of a stable job history and a low debt-to-income ratio. These changes, while designed to promote financial stability, have inadvertently created a challenging environment for middle-class families. The reality is that many of these families, despite having steady incomes and being responsible borrowers, find themselves locked out of the housing market due to these tightened lending standards. The result? A growing divide between those who can afford to buy homes and those who can't. The American dream of homeownership, once considered a rite of passage, has become a distant vision for many middle-class families. But don't lose hope just yet. Remember, like any challenge, this one too can be overcome. It may require some extra effort, strategic planning, and patience, but the dream of homeownership can still be achieved. With these strict lending standards, homeownership has become an unattainable dream for many middle-class families. But remember, every cloud has a silver lining. As homeownership becomes increasingly difficult, many middle-class families are turning to the rental market. With the high cost of homes and stringent lending standards, more and more middle-class families are finding themselves in the rental market. It's not just about affordability. It's also about flexibility. Renting offers the opportunity to live in desirable areas without the hefty mortgage and allows for easier mobility for those who need it. However, the rental market is not without its challenges. As demand increases, so too do rental prices. This can make it difficult for families to save for a future home purchase. Additionally, renting lacks the long-term stability that comes with owning a home. So, what's the solution? Well, there's no magic bullet, but there are several strategies that can help. One potential solution is to increase the housing supply. This could be achieved through new construction or changes to zoning laws to allow for more high-density housing. By increasing the supply, we can help to stabilize or even reduce housing prices. Government programs also have a role to play. Programs that offer down payment assistance or promote affordable housing can make homeownership more accessible to middle-class families. Addressing the student loan debt crisis is another crucial piece of the puzzle. High monthly payments can prevent potential homeowners from saving for a down payment. By finding ways to reduce this burden, we can help more people move towards homeownership. Finally, we need to reevaluate our lending standards. While it's important to prevent risky lending, overly strict requirements can lock out responsible borrowers. By finding a balance, we can support responsible homeownership without contributing to another housing bubble. Closing. While these solutions won't change the situation overnight, they can pave the way for a more affordable housing market. The current state of the U.S. housing market is indeed grim for middle-class families. We've journeyed through the rising home prices, stagnant wages, and strict lending standards that have led to an increased rental market. These challenges highlight the need for solutions that support middle-class homeownership, crucial for long-term economic stability and the pursuit of the American dream. Remember, your voice matters. Together, we can make the dream of homeownership a reality for all. Please like, share, and subscribe to our channel for more insightful discussions.